This is your technical update from the LMAX Exchange Research and Analytics Desk for Tuesday, July 26th, 2016. Euro dollar. So the euro is taking its time, but it's certainly being pressured to the downside with a focus now on next key support at 109.12, that low from the 24th of June, a break below which would expose 108.23 further down. That's medium-term support, which comes in the form of that low that we saw back on March 10th. So the pressure remains on the downside with any rally seen well capped, and only a break back above 111.87 to compromise this bearish outlook. Sterling dollar. So not much going on with cable over the past couple of sessions. The market has been consolidating off those recent multi-year lows, those plus 30-year lows that we saw the other week, down just under 128. At this point, the pressure remains on the downside with any rally seen very well capped. And ultimately, if we do see any rallies, they should be capped ahead of the 138 in favor of the next downside extension below that recent low just under 128 and towards next key psychological barriers at 125 further down. Dollar yen. So dollar yen looks like it could be rounding out another lower top, this time at 107.49, ahead of the next major downside extension back towards and eventually below those recent 2016 and multi-month lows at 98.99. Look for a daily close on Tuesday below recent support at 105.42 to strengthen this outlook and accelerate declines. Euro Swiss. So Euro Swiss continues to consolidate in tight trade, though the market remains very well supported on dips down towards 108. Ultimately, we would need to see a break and close below 107.78 to take the immediate pressure off the top side. Aussie dollar. So Aussie showing signs of the formation of a medium-term lower top at 76.77 from several days back, with the risk now for deeper setbacks back towards next key support on a medium-term basis at 71.45. Look for any rallies to be well capped with only a break back above 76.77 to compromise this bearish outlook. Dollar CAD. So a major development for dollar CAD on Monday, with the market finally taking out critical resistance at 131.89. The break above 131.89 now does a good job of confirming this major base off the 2016 low that was established back in May, opening the door for a fresh upside extension and measured move towards the 135 to 140 area. Kiwi dollar. So Kiwi has been consolidating its latest setbacks, though ultimately this latest breakdown does suggest that the market should be poised for additional declines down towards next key medium-term support at 66.75. Any rally should be very well capped now ahead of 72, while ultimately only back above that 2016 high 73.25 takes the immediate pressure off the downside. SPX 500. So the S&P 500 is consolidating just off its recent record highs at 2179. Though the market is starting to show signs of looking a little bit exhausted, there is still risk for additional upside in this market towards 2200 before it considers reversing, though if we do see a reversal, we would need to establish back below 2150 on a close basis to take the immediate pressure off the top side. But again, there is signs of exhaustion in this market, which could pave the way for a significant decline in the sessions ahead. Gold. So gold has been under pressure over the past several days, though ultimately the market should find formidable support around 1300 in favor of the next higher low and fresh upside extension back above the recent 2016 peak around 1375 and towards 1400 and beyond. At this point, only back below 1250 would really compromise or take the immediate pressure or delay the constructive outlook for gold.